Silver just plummeted 14% in a single session, gold merely 2%. Identical day, identical market, and nobody in mainstream media can clarify why. Actually, that's false. I can clarify precisely why. And when you discover it, you're going to be enraged. Silver reached 117.75, the highest valuation in human history. And then suddenly it plunged to $102. If you observed my previous content, you already understand why this occurred. I presented you the precise textbook formation that was developing. I informed you this plunge was approaching, and it unfolded exactly as I forecasted. If you haven't observed that content, go observe it after this one. Now everyone is questioning the identical thing. Is the silver bull market finished? Did we just witness the final blow-off peak? I'm going to provide you my genuine response, and then I'm going to present you evidence that will transform how you perceive this entire situation. Brief response: no. The bull market is not finished. But here's what frightens me. What occurred yesterday was not normal. This is not regular volatility. And if you don't comprehend what is genuinely occurring, you're going to get shaken out right before the largest move occurs. Remain until the conclusion of this content. I'm going to inform you precisely what I believe occurs to silver in the next 30 days. Specific price objectives, what I'm personally executing with my own capital. No hedging, no perhaps this or perhaps that. Genuine discussion. Welcome to the concealed financial system. If you wish to comprehend what is genuinely occurring while mainstream media feeds you garbage, like, subscribe, and activate notifications. Drop Silver Rush in the comments if you're prepared to perceive the truth. Let me present you what actually occurred because the figures are insane. Silver just swung nearly $2 trillion of market capitalization in 14 hours. Between 9 a.m. Eastern and 1 p.m. Eastern, silver added $500 billion of market capitalization in 4 hours. That's roughly 1/3 of Bitcoin's entire value added in a single morning. Then between 1 p.m. and 4:30 p.m., silver lost $950 billion, almost $1 trillion vanished in 3.5 hours. Then between 4:30 p.m. and 10:30 p.m., silver added back $500 billion, up $500 billion, down $950 billion, up $500 billion in 14 hours. Silver is moving capital equal to all of Bitcoin's value in just a few hours. This is a significant moment that people will discuss for many years. That portion is accurate, but no one has clearly clarified why it's occurring. I already did in my previous content. Go observe it if you haven't. But today I want to respond to a different question. The question everyone is questioning. Is this the conclusion? And to respond to that, I need to inform you a story. Perhaps you've heard of it, but it's important to discuss to comprehend the whole situation. A story about two brothers from Texas who witnessed precisely what we are witnessing today. 45 years prior, 1980, Nelson and William Hunt, billionaires, oil capital, intelligent capital. They examined America and witnessed what most people refuse to witness. Inflation was destroying the dollar. The currency was dying, and they believed the only secure place for their wealth was silver. So they commenced purchasing. At their peak, they controlled over 100 million ounces, more than most countries, and it functioned. Silver went from $6 to $50 in months. The Hunt brothers were about to become the richest men in the world. Then one phone call transformed everything. The exchange, where silver trades, transformed the regulations overnight. They implemented something called Silver Rule 7. This rule stated you could sell silver, but you could not purchase. You could sell, but you could not purchase. What occurs to any market where everyone can only sell? It collapses. Silver crashed from $50 to under $11 in weeks. The Hunt brothers lost everything. Now examine what occurred yesterday. Silver reached all-time highs, and then with zero news, zero catalyst, it crashed 14% in hours, while gold only dropped 2%. Same formation, different decade. But here's what's different this time, and this is what the mainstream media will never inform you. Everyone is stating silver is overvalued at $100. Rick Rule is stating it. CNBC is stating it. Every pundit on financial television is stating it. Overvalued compared to what? Let me present you something that broke my brain when I first witnessed it. In 1980, silver reached $50. That was the all-time high before this year. But $50 in 1980 is not the identical as $50 today. The government measures inflation using CPI. But here's the dirty secret. In the 80s and 90s, they transformed how they calculate CPI. They made adjustments that conveniently made inflation appear lower than it actually is. There's a website called Shadow Stats that calculates inflation using the old methodology, the way the government measured inflation before they commenced manipulating the figures. Using genuine inflation, the $50 high in 1980 equals $1,639 today. Let me state that again, $1,639. Silver is at $110 right now. That means silver needs to rise another 1,500%, just to equal its 1980 high in genuine terms, 1,500% from here. And people are informing you it's overvalued. Go to shadowstats.com, examine it up yourself. Don't trust me, verify it. When you witness those figures, everything transforms. Now let me present you something else, because if this were genuinely the peak, we would be witnessing certain signs. And we're not witnessing any of them. Here's how you identify a genuine blow-off peak, a genuine conclusion of a bull market. First, you witness euphoric sentiment. Everyone is bullish. Your Uber driver is providing you silver tips. CNBC is running 24-hour coverage. There are lines outside coin shops. People are quitting their jobs to trade silver. Is that occurring? No. What I witness is disbelief everywhere. I witness people calling the peak. I witness traders attempting to short every bounce. I witness mainstream media screaming that it's finished. That's not how peaks function. That's how middles function. Second, you witness massive retail participation. In a true mania, capital floods into ETFs. Silver ETFs like SLV and PSLV should be exploding with inflows. What's actually occurring? ETF participation is weak. Flows are modest. The public is not in this trade yet. Third, you witness mining stocks going parabolic. In every precious metals bull market, the miners leverage the move. If silver doubles, miners should triple or quadruple. Junior miners should go up 10x. What's occurring? Mining stocks have barely kept pace with silver itself. Some are actually underperforming. The speculative mania has not even commenced. Fourth, you witness the fundamentals weakening. At genuine peaks, the reasons for the bull markets commence to fade. What's occurring with fundamentals? They're getting stronger. Central banks purchased more gold last year than any year in modern history. Silver demand has exceeded supply for 4 consecutive years. The deficit is growing, not shrinking. Industrial demand is exploding because of solar panels and EVs. Every single indicator states early to mid-cycle, not the peak. Not exhaustion, not the conclusion. But here's where it gets genuinely interesting. Here's the portion that should make you pay very close attention. Examine what silver is trading for around the world right now. In China, tangible silver is trading at $132 per ounce. Japan, $140. Middle East, $128. The exchange paper price, $110. There's a $20 to $30 gap between what genuine tangible silver costs around the world and what the paper market states. What does that inform you? It informs you the paper market is lying. It informs you that people who actually want tangible silver are compensating massive premiums to obtain it. It informs you that the manipulation is reaching its limits. In 1980, the Hunt brothers had nowhere else to go when the exchange transformed the regulations. The exchange was the only game in town. Today, Chinese purchasers don't care about exchange regulations. Indian families purchasing silver for weddings don't care about exchange regulations. Middle Eastern investors don't care about exchange regulations. The world has transformed. The paper market can manipulate prices all they want, but the tangible market is informing the truth. And eventually, always, the tangible market succeeds. This is why I don't believe the bull market is finished. Let me take a breath here. Inform you something amusing, because this gets intense and we all need a moment. Last week, my barber questioned me about silver. This guy has cut my hair for 6 years, never once discussed investing. Thinks a stock is something you make soup with. He goes, "Hey, I witnessed silver reach $100. Should I purchase some?" And I just commenced laughing. Not at him, at the situation. Because you know what? He's questioning the correct question. A barber is questioning the correct question while half of Wall Street is attempting to short silver. Sometimes the smartest capital is not intelligent at all. It's just regular people who can witness what's obvious. All right, back to business. Now, let me inform you about the manipulation, because you need to comprehend who you're up against. The major institutions, JP Morgan, Goldman Sachs, BlackRock, these institutions have enormous short positions in silver. Billions of dollars wagering silver goes down. This is not conspiracy. In 2020, JP Morgan compensated $920 million to the Justice Department for manipulating precious metals markets. That's public record. Google JP Morgan, precious metals manipulation settlement. Verify it yourself. Now contemplate what occurs when you have an enormous short position and silver commences running. Every dollar higher costs you hundreds of millions. If silver keeps running, you face forced liquidation. You have to close your shorts at any valuation. So what do you execute? You flood the market with sell orders. Millions of ounces in seconds. You trigger the algorithms. The bots witness enormous selling. They commence selling. Retail traders witness the crash. They panic sell. Then you cancel your sell orders. You never wanted to actually sell. You just wanted to create the cascade. Now you purchase at the bottom. You just covered your shorts $15 cheaper. Is it legal? Almost impossible to demonstrate. Is it ethical? You decide. But here's the key point. Manipulation can delay a move. It cannot halt fundamentals forever. Contemplate it like this. Attempting to suppress silver right now is like attempting to hold back a tsunami with a paper wall. You might decelerate it down for a second. You might make people believe you're succeeding, but when it breaks through, and it always breaks through, it destroys everything in its path. That's what's occurring right now. They're holding up their paper wall, and the tsunami is building behind it. Silver supply has been in deficit for 4 years. We're consuming more than we mine. Every solar panel needs silver. Every electric vehicle needs silver. Every smartphone, every laptop, every server, and every data center. And we're running out of easy silver to find. It requires 7 to 10 years to bring a new silver mine into production. Even if silver went to $500 tomorrow, significant new supply wouldn't reach the market for a decade. This is not speculation. This is basic supply and demand. And supply and demand always succeeds in the conclusion. Let me inform you about 3 types of people observing this content right now. The skeptic. You've heard about silver for years. Every time nothing occurred. Bitcoin did 100x while silver went sideways. You believe this is another false start? And honestly, I respect that skepticism. The believer, you've been accumulating silver for a decade. Everyone called you crazy. Now you're finally profitable, but you're terrified they'll smash it again. You've witnessed the rug pulls before the newcomer. You just heard about silver because it reached the news. You have no position. You don't know if you missed it or if there's still time. Here's what I want to inform all 3 of you. The evidence states this is not the peak. Every indicator I track states we're early to mid-cycle. The fundamentals are strengthening, not weakening. The tangible market is compensating huge premiums over paper. Central banks are purchasing gold at record levels. Does that mean silver goes straight up? Absolutely not. We could witness another 20% correction tomorrow, 50% even. That's how bull markets function. They shake out weak hands. They make you question everything. Then they go higher than anyone expected. Now here's what I promised. What do I believe occurs in the next 30 days? I'm not going to hedge. I'm going to inform you what I actually believe. Next 2 weeks, extreme volatility, $10 swings in single days. The significant players need to cover their shorts. They need scared sellers. They're going to attempt everything to shake people out. Late February, we make another run at 120. If we break through and hold above 120 for more than a few days, the next objective is 150. End of year, I believe we witness $200 silver before December, perhaps higher if the dollar weakens significantly. What am I personally executing? I'm not selling, period. I'm holding through the volatility on significant dips. I'm adding small amounts, capital I can afford to lose, capital that can sit for years if needed. I'm not leveraged. I'm not trading futures. I'm not attempting to catch every swing. I'm positioned and I'm patient. That's my approach. Yours should fit your situation. Now let me provide you the other side because I wouldn't be honest if I didn't. Could this blow up? Yes. In 1980, silver crashed 90% after reaching $50. It required over 40 years to recover. If you purchased the peak, you waited 4 decades to break even. That's genuine. That occurred. Could they transform the regulations again? Yes. If they implement position limits, elevate margins, restrict trading, they could crash this tomorrow. They've executed it before. Could I be completely incorrect? Yes, I've been incorrect before. I'll be incorrect again. This is not financial advice. This is one person's analysis based on the evidence I witness. Your capital, your decision. But here's what I believe. The bull market is not finished. The genuine move has not even commenced. We're witnessing early to mid-cycle behavior, not exhaustion. The fundamentals are stronger than ever. The tangible market is compensating premiums the paper market cannot clarify. And the 14% crash we just witnessed, that was not the market informing us it's finished. That was the significant players attempting desperately to cover their shorts before this thing gets away from them. If you observed my previous content, you know I forecasted this precise move. I presented you the formation. I clarified why it would occur, and it occurred. Now I'm informing you what I believe comes next. Screenshot this content. Save it. Come back in 6 months. Let's witness who was correct. 5 years from now, you're going to remember January 2026. You're going to remember silver at $110. You're going to remember the crash, the fear, the people screaming that it was finished. And you're either going to be grateful you paid attention or you're going to wish you had. Is the silver bull market finished? No. But you have to pay attention because this is not normal. Drop silver rush in the comments if this opened your eyes. Send this to one person who needs to witness it. someone you care about who has no idea what's occurring. Subscribe if you want the truth, not the mainstream narrative, the truth, because the genuine story is never on the surface. I'll witness you in the next one. Stay awake. But wait, before you go, there's something else I need to cover. Something most people completely miss, and it could be the difference between making generational wealth and getting eliminated. Why silver? Why not just purchase gold? Why not Bitcoin? Why not just put your capital in the S&P 500 and forget about it? Let me break this down because it matters more than you believe. Gold is incredible. It's the ultimate store of value. Central banks hold gold for a reason. It has been currency for 5,000 years. I possess gold. You probably should too. But gold doesn't have the upside potential that silver has right now. There's something called the gold to silver ratio. It informs you how many ounces of silver it requires to purchase 1 ounce of gold. Throughout most of human history, this ratio averaged somewhere between 40 and 50. For thousands of years, silver was valued at roughly 1/50th the valuation of gold. Right now, that ratio is around 75, sometimes higher. What does that mean in simple terms? Silver is historically cheap compared to gold. Way cheap. If that ratio just reverts to the historical average, not even goes to an extreme, just reverts to normal, silver outperforms gold by a huge margin from here. Even if both go up, silver goes up more in percentage terms. This is not some wild prediction. This is mean reversion, one of the most reliable formations in all of financial markets. Now, what about Bitcoin? Look, I possess Bitcoin. I believe it has a place in a portfolio. It's digital gold for the digital age. But Bitcoin and silver are fundamentally different things. Bitcoin requires electricity, it requires internet, it requires functioning technology infrastructure, it requires the continued operation of complex global systems. Silver functions when the power goes out. Silver functions when the internet goes down. Silver functions when the bank freezes your account. Silver functions when the government decides they don't like what you're executing with your capital. Silver has functioned as currency for 5,000 years. It will function for 5,000 more. And here's something else. You can hold silver in your hand. You can bury it in your backyard. You can pass it to your children and grandchildren. Attempt executing that with Bitcoin when the grid goes down. I'm not attacking Bitcoin. I possess it. But they serve different purposes. And right now, based on the fundamentals, the risk reward on silver is exceptional. What about stocks? The S&P 500. Stocks are excellent when the economy is growing, when corporate profits are rising, when inflation is under control, when interest rates are stable. But examine around. Government debt is exploding. Inflation is sticky. Geopolitical tensions are rising everywhere. The dollar's dominance is being questioned for the first time in decades. In environments like this, hard assets tend to outperform paper assets. That's not my opinion. That's history every single time. Silver is not an either-or proposition. You can possess stocks and silver. You can possess Bitcoin and silver. You can possess gold and silver. Diversification is intelligent. But if you possess zero silver right now, after everything I've presented you, after the fundamentals I've laid out, after the supply-demand picture, after the inflation-adjusted analysis, I believe you're making a mistake. Let me go deeper on why silver is different from any other commodity on Earth, because this is what most people don't comprehend. Silver is the only major asset that's both a precious metal and an industrial metal at the identical time. Gold mostly sits in vaults. It's held, it's stored, it's worn as jewelry. It's not genuinely consumed in any meaningful way. Silver gets used up, destroyed, dispersed into the economy in tiny amounts, gone forever. Every solar panel on Earth contains about 20 grams of silver. And the world is installing solar at the fastest rate in human history. China alone installed more solar capacity last year than the entire world had installed in all of history before 2015. Contemplate that. Every electric vehicle needs 1 to 2 ounces of silver. A traditional gas car uses perhaps half an ounce. As the world goes electric, silver demand from automotive alone is going to multiply several times over. Every smartphone has about 1/3 of a gram of silver. Every laptop has a few grams. Every tablet, every smartwatch, every pair of wireless earbuds. How many of these devices get sold every year? Billions. Literally billions. Every server in every data center needs silver. Every piece of medical equipment, every water purification system, every electrical contact and switch, every missile and military system. Silver is in over 10,000 industrial applications. That's not an exaggeration. 10,000 documented uses. Because silver is the best conductor of electricity known to man, the best reflector of light, one of the best thermal conductors, and it has antimicrobial properties. There's no replacement that functions as well. Scientists have been attempting to find substitutes for decades. They've failed. Silver is simply the best. And here's the critical point. All of this silver gets consumed. It doesn't sit in a vault like gold. It gets dispersed in tiny amounts across billions of products around the world. When you throw away your old iPhone, that silver is gone. When a solar panel fails after 25 years, that silver is gone. When a car gets crushed, most of that silver is gone. It doesn't get recycled. The amounts are too small. It costs more to recover than it's worth, so it just disappears into landfills and waste streams. Unlike gold, which is almost entirely recycled and preserved throughout human history, silver vanishes into the global economy, used up forever. This is why supply deficits matter so much more for silver than for almost any other commodity. We're drawing down inventories that require decades to build, and we're not replenishing them. The Silver Institute, the leading authority on silver supply and demand, states we've been in a structural deficit for 4 consecutive years. Demand exceeds supply every single year, and the gap is growing. Now, some people state, well, if valuations rise, miners will just produce more. Supply will increase to meet demand. Basic economics. That's accurate for most commodities. It's not accurate for silver. Silver mining is not like manufacturing. You cannot flip a switch and make more silver. First, you have to find a deposit. That requires years of exploration, thousands of drill holes, geological analysis. Most exploration projects fail. Perhaps 1 in 1,000 actually becomes a producing mine. Then you have to demonstrate the deposit is economically viable. More drilling, feasibility studies, environmental assessments, metallurgical testing that requires more years. Then you need permits. In most jurisdictions, permitting requires 5 to 10 years. Environmental reviews, community consultations, legal challenges, government approvals. Every step requires time. Then you have to build the mine, clear the land, build roads and infrastructure, install processing facilities, train workers, commission equipment, test everything from discovery to first production. You're examining 7 to 15 years minimum, and that assumes everything goes smoothly, which it never does. So even if silver went to $500 tomorrow, significant new supply wouldn't reach the market until the mid-2030s at the earliest. And here's the other thing most people don't comprehend. There are very few primary silver mines in the world, mines that exist specifically to produce silver. About 70% of all silver production comes as a byproduct of other mining. Copper mines, zinc mines, lead mines, gold mines. These operations are not optimizing for silver. They're mining whatever the primary metal is, and silver just happens to come out as a bonus. If copper valuations crash, copper mines reduce production or shut down. Silver supply falls as a result. Even if silver valuations are rising, this is a completely different dynamic than most commodities. Silver supply is largely inelastic. It doesn't respond quickly or directly to silver valuations. And that means when demand outstrips supply, valuations can move a lot more than people expect. Let me add one more piece to this puzzle. Central banks. Last year, central banks around the world purchased more gold than any year in recorded history, over 1,000 tons. Massive, unprecedented accumulation. Why would central banks be purchasing gold at record levels? These are not speculators. These are not retail traders. These are the institutions that manage national monetary reserves. The people who comprehend the global financial system better than anyone. They're purchasing gold because they witness something approaching. They're diversifying away from dollars. They're preparing for a world where the current monetary system might appear very different. China has been purchasing gold every single month for years. Russia has been stockpiling. India, Turkey, Poland, Singapore. Even countries you wouldn't expect are quietly accumulating. When central banks purchase gold, it informs you something. It informs you the smartest, most informed players in the world are hedging against the current system. And when gold rises, silver historically follows, often with higher percentage gains because of its smaller market and more volatile nature. This is not about conspiracy theories. This is about following what the most powerful financial players in the world are actually executing, not what they state. What they execute and what they're executing is accumulating hard assets at the fastest pace in modern history. Now let me inform you about a concept called wealth transfer, because this is what's genuinely at stake, and I need you to pay very close attention here right now as you observe this content. Wealth is moving silently and visibly from people who don't comprehend what's occurring to people who do. The question is not whether this transfer is occurring. It's occurring. The question is which side of that transfer are you going to be on? Throughout history, periods of monetary instability have created enormous transfers of wealth from those who didn't witness it approaching to those who did. In Germany, in the 1920s, people who held paper currency lost everything. People who held hard assets became wealthy. In America, in the 1970s, people who held dollars witnessed their purchasing power collapse. People who held gold and silver witnessed their wealth multiply. Every time there's a major monetary disruption, wealth moves. From the unprepared to the prepared, from those holding the incorrect assets to those holding the correct ones. I believe we're in the early stages of another such period. The signs are everywhere. Record government debt, sticky inflation, dollarization movements, central bank gold purchasing, geopolitical fragmentation. I'm not stating the system is going to collapse tomorrow. I'm not stating the dollar is going to zero. What I'm stating is that the probabilities favor having some exposure to hard assets like silver. If I'm incorrect and everything's fine, you possess some silver. It has held value for 5,000 years. It's not going to zero. If I'm correct and we're entering a period of monetary instability, having silver could be one of the best financial decisions you ever make. That's the asymmetry I'm examining. Limited downside, potentially enormous upside. Let me come back to the main question. Is the silver bull market finished? Based on everything I've presented you today, the inflation-adjusted analysis presenting silver at 110 versus the genuine high of over 1,600, the supply deficits that have persisted for 4 years, the industrial demand that keeps growing, the tangible premiums around the world, the weak ETF participation, the absence of euphoric sentiment, the fundamentals that keep strengthening. Based on all of that, my response is no. The bull market is not finished. We're early to mid-cycle, not late cycle. But I want to be very clear about something. This is not going to be easy. The volatility we witnessed this week, the 14% crash while gold only fell 2%. That's going to occur again, probably multiple times. The significant players are not going to give up without a fight. They're going to slam the valuation. They're going to trigger stop losses. They're going to shake out as many weak hands as they can. That's how they operate. That's how they've always operated. The question is whether you're going to let them shake you out. If you comprehend the fundamentals, if you comprehend why you possess silver, if you're sized appropriately and not over-leveraged, you can hold through the volatility. You can even add on the dips. But if you're gambling with capital you cannot afford to lose, if you're leveraged to the hilt, if you don't actually comprehend why you possess silver, you're going to panic sell at the worst possible time. You're going to be the exit liquidity for the significant players. Don't be that person. Position appropriately, comprehend your thesis, and then have the conviction to stick with it. Screenshot this content, save it, come back in 6 months, come back in a year. Let's witness who was correct. 5 years from now, you're going to remember January 2026. You're going to remember silver at $110. You're going to remember the crash, the fear, the media screaming that it was finished. And you're either going to be grateful you paid attention or you're going to wish you had. Is the silver bull market finished? No. But you have to pay attention because this is not normal. Drop Silver Rush in the comments if this opened your eyes. Send this to one person who needs to witness it. Just one person you care about who has no idea what's occurring in the silver market right now. Subscribe if you want the truth, not the mainstream narrative, the truth about what's genuinely occurring in the financial system. The genuine story is never on the surface. I'll witness you in the next one. Stay awake.